Our next story is coming to us from AMB Crypto, and the title of this article is The United States FSOC. That's a thing. Asks officials to monitor risks from digital assets. So, kind of compounding on the story that we just covered with this message to stop trying to create money and only central banks can do this. U.S. financial regulators have they've already done this, appealed to federal and state officials to monitor risks from digital assets like Bitcoin. Now, the Financial Stability and Oversight Council, you know that our economy has gotten too complicated when you have a regulatory agency like this, was formed in the wake of the 2008 financial crisis. Lots of things were formed in the wake of the 2008 financial crisis, including the government telling me that I cannot use more than 1x leverage on my precious metal trades. For that reason alone. Screw you guys. Not you guys, the government. They're moving on. And this regulatory agency, the FSOC, has a mandate to identify and address risks of future banking disasters. So, of course, let's put Bitcoin under the spotlight because Bitcoin, I'm sure, is what's going to lead to the next banking collapse, right? Not the massive over-leveraging of commercial banks and investment banks with betting big on oil futures and utilizing all of the pension fund money that individuals are investing with them and telling them, yeah, it's totally safe, man, and chopping up collateralized debt. The FSOC panel has some high-profile members, such as Treasury Secretary Steve Mnuchin, because he's trustworthy, Federal Reserve Chair Jerome Powell, because his haircut's great, SEC Chair Jay Clayton, and CFTC Chair Heath Tarbert. I prefer Bitcoin Mom in there. But anyways, the panel just published its annual report, which discusses risks that could lead to financial crisis. One section of the report did cover the topics of digital assets and distributed ledger technology, what we call DLT around these parts. I did note a big growth in the market cap of major, not minor, major digital assets and the volatility that these assets have been subjected to. The report talked about the, quote, ultimate success of the technology, including applications in the financial sector, is not yet certain. There are just certain things that I read in official reports. There are things that I often read from the most highest paid financial analysts on Wall Street, right? That just make me want to throw tomatoes at the wall. Because if you are being paid 6 figures a year or more, and the best that you can do with your opening salvo is, hey, man, nothing's for certain. Future's unknown. It's all a chance. Everything could happen. Every moment in the market's unique. Quantum physics, bro. Spin up or spin down. If that's the best that you can do, then I get very, very, very exasperated very quickly because anybody can say that. The difference between people who are useful and the people who are not useful is, hey, man, anything can happen. Yeah, bro, we know, no doubt, anything can happen, of course, right? So, can you, give us some information? Well, if this happens, then we have a statistical likelihood that we should do this in response. And if this happens over here, we should do this in response. Well, okay, now we're getting better. And here's the data for option A. Here's the data for option B. Okay. I'm impressed. Go ahead. Pro tip. They don't cover that in this report. That's basically all we've got to talk about. Now, the report did go on to read that the council recommends that federal and state regulators continue to examine risks to the financial system posed by new and emerging uses of digital assets and DLT. The market capitalization of digital assets has grown rapidly in recent years, but so far digital assets have not been widely accepted as a means of payment or store of value. Tell that to the Chinese. The report cited, quote, risks to consumers, investors, and businesses associated with potential losses or instability in market prices, along with, quote, illicit financial risks, risks to national security, cybersecurity, and privacy risks, and risks to international monetary and payment system integrity. Because they're doing that great all on their own. Now, let's just dissect that for a second. Let's dissect that for just a second. Okay, so the report, we start off here. The quote was, the report highlights the risks stablecoins pose for the wider world economy. Well, the reality there is that we have not seen the inflation rate of stablecoins, right? So again, depending on what your perspective is, the idea that inflation is good because it stimulates the economy, again, that is a theory. Or the idea that inflation is bad because it eradicates your savings and incentivizes people to spend money and rather than save money, which seems like how a sane society or economy would be structured. We just haven't seemed to figure that out. Most capitalism we got nailed down pretty good, but that one right there, that's kind of a tricky. And I'm not going to sit here and have everybody tell me you guys need, again, like I'm not going to sit here and powerhouse my way through any like protestations you guys may have. But one thing to be said is that the idea that inflation is inherently good because it boosts the economy is that's a philosophical school of thought, right? Again, technology pushes philosophy. So, you're going to hear that inflation, that a steady inflation rate of, 2 to maybe 2.5% a year is the only way to do things. No, bro, that's just the only way that we figured out to keep this overwhelming train going. We don't yet know if that ultimately always ends in collapse, because we do know that we have not set our monetary system up in such a way to incentivize savers, right? We've incentivized speculation, right? All investment is speculation. It's a synonym, okay? So instead of people being able to hold their value in a store of value, because the currency of the world, the currency of all major fiat countries, is an inflationary fiat currency, not a store of value, because we've gone off the gold standard, right? So, and, again, the idea that gold is a store of value is only, relative to people's perceptions of gold, right? So, just like people view oil as a store of value, right? But again, that's only technology drives philosophy, right? So if oil becomes no longer relevant, its use as a store of value will not be very valuable, right? That old lizard carbon will not be very useful. But let's see here. Again, so I just want to make that clear. The idea that inflation is necessary is unknown. It's a social experiment that we're currently in the progress of, right? Again, what we do know is that our economy and our monetary system is not set up to incentivize savers, because inflation destroys your savings rate over time and incentivizes people to speculate, forces people to speculate via investment into future prices of certain things or the future value of companies, assets, commodities, Bitcoin, whatever, rather than just save their freaking money and get wealthy over time and be able to pass that wealth onto their family, because there's no easy liquid medium of store value. It doesn't exist. You have to go speculate. That may not be a good idea. We're told that it's a good idea, but again, that's because that philosophy is being promoted by individuals who set the system up in the first place, and it's the system that we all utilize, and it seems to kind of work for the most part. And the devil you do versus the devil you don't, but again, philosophy, technology drives philosophy. So let's let Bitcoin and DLT technology change our philosophy, and then we'll revisit this concept in 10, 15 years. Let's see here. And it's noted that if stablecoins are widely adopted as a means of payment or a store of value, any disruption of the stablecoin system could affect the wider... yeah, duh. Duh. Let me reread that. If stablecoins are widely adopted as a means of payment or a store of value, any disruption to the stablecoin system could affect the wider economy. Yeah. Just like if all of a sudden buses stopped working, that would be a disruption to the wider transportation economy. Just like if the Federal Reserve exploded, that would be a disruption to the current wider economy. That's like saying hey man, if something is widely adopted and then there's a disruption in the central system, that could be a big problem because a lot of people use it. We're going to have to take a break here in just a second, but let me finish this article. We'll come back and finish the second one after the break. The report cited risks to consumers, investors, and businesses associated with potential losses or instability in market prices. Okay. Did you have money in the market in 2008? Did you see it go down 50%? So don't tell me that Bitcoin is unique or that cryptocurrencies are unique in the fact that they're a tradable asset with a volatile market value. Get out of here with that. Illicit financial risks. Most crimes are done with Benjamins, not the blockchain. This is why most dollar bills carry traces of cocaine. Risks to national security. I think that the Democrats are doing that pretty well, but the Republicans are pretty bad at it too. So they're both pretty bad. Cybersecurity and privacy risks. Again, let's focus on Facebook and maybe Amazon, and then we can talk about blockchain. And risks to international monetary and payment system integrity. Well, we covered that pretty good with the Augustine Carsten system, but it's not like you guys have set up an infallible system. So we're going to innovate. Can't stop us. Come at me, bro. Now, while most regulators in the United States are taking a standoffish approach to cryptocurrencies, others, such as ex-CFTC chairman Christopher Giancarlo, the hated, the treacherous, the loved, the he let us down, the he's amazing, he's Satoshi Nakamoto, gentlemen of lore, have pushed for faster adoption of blockchains, arguing that the U.S. could fall behind other countries as the fast-moving technology develops. Well, looking at China and the United States, I would say that Mr. Giancarlo was pretty on point with that. So let me know your guys' thoughts. Again, covered a lot of things that could or could not be considered controversial in this topic. Again, if you're watching this in a later Breaking Bitcoin Bits, please leave your comment in the section down below, and I'd love to answer any of your questions, and pop your questions in the chat for the live Q&A at the end of today's episode. I think that's good to call it right there. We do have another